Zero DTE options are a powerful way to potentially make big returns fast. And the simple three-step indicator setup you'll learn in this video will transform the way you trade them and the results you can achieve. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to develop numerous 7 and even 8-figure per year traders. Watch, take notes, and learn so you can grow your trading account.
All right, we're here with Garrett. I'm really excited about the strategy. We're seeing more traders do this on the desk. Garrett, take it away.
All right, so trading momentum with ODTE options can be an extremely explosive strategy. But with this incredible upside that comes with this strategy, there are also very specific risks that, when ignored, often lead traders to crash and burn.
And what we're talking about here, just to clarify, because we're not talking about selling premium at this point. That's a totally different strategy. That's Seth's world. We're talking about directionally trading zero DTE options.
In this video, we're going to outline these risks that come with trading zero DTE options, risks that frankly cannot be ignored. And we're going to go over specific indicators we use to help sidestep each of these risks.
And you found 3 indicators that really add the most value, right?
Yes.
Okay. And those 3 indicators, are they things that everybody can find?
Yeah, they're all on every platform that I know of.
Okay.
You can just bring them up.
Cool, great. So let's get into it.
Yeah, and these 3 indicators are going to work together. So this is really like one setup, but we're going to combine 3 indicators. So
interesting. Okay.
So in the end, we'll reveal how to trade this simple 3 indicator setup for crushing zero DTE options, including specific entries and exits.
Well, why can't you just tell us so we can just start trading it now? Is there stuff that I need to know about each of these, or
you have to understand.
Okay. All right.
How to read them, but yeah.
All right, then let's get going because I want to find out how to trade it. So let's go.
All right. So as you know, I'm big on testing strategies. I've tested these 3 indicators extensively for trading this exact kind of momentum, and together they complement each other incredibly well. So, what are these risks of trading zero DTE options? So, these options contracts expire at the end of the day, and this makes them incredibly sensitive to volatility and time decay. Because of this sensitivity, because they're so close to expiring, you can buy them for extremely cheap, which is why we can make incredible gains when trading these instruments. But why are they so cheap? It's because of the risks that they'll expire worthless, and it's very easy for this to happen because the decay is rapid.
I've been in that trade where you think something's going to happen, and even worse, it starts to happen. And then you start to get into that decay, and the decay happens so fast, and it is so painful. So I'm really hoping this strategy that you've put together can help me stay away from that. Really, you'll hear me on the desk kind of, this sucks. And it really is, because I feel helpless when that decay starts and the price action isn't working out, because a lot of times I don't really have a plan of how to get out of the trade. So are you going to help us understand that too?
Yeah.
Okay. All right, good. Then let's move forward.
All right. So with options, and especially these zero DTE options, unlike with trading stock, if you're long and price is not doing anything, you can really get killed in the position. And that's exactly what Jeff is talking about here, right? So the clock is ticking. And if you sit around in a position that is not moving, your position will go to zero, right? That's very different than stock, where you can just kind of sit there and it doesn't do anything, right? So we need price to move in this situation. So we have to time our moves really well. We don't want to get in too early. We want the stock to move in our favor immediately. We need to make sure that the stock is ready to move and has already done its resting. Okay, we want our stock to have already built up enough energy. We want to know that it's ready to run. So how can we do this? Well, there's an indicator that is amazing at identifying when a stock has been resting enough to have the energy to really run. It's called the Bollinger Band squeeze.
All right, but everybody knows the basics of a Bollinger Band squeeze, or if they don't, I guess, the core components of it. seem to be standard deviations of price volatility, right?
Yeah, it's a Keltner channel and it's a Bollinger Band.
Okay.
So the Bollinger Band squeeze occurs when a Bollinger Band crosses inside a Keltner channel, and this quantifies a certain magnitude of compression and energy that has built up in the stock. Okay, so if we look at this chart for a second, you can see the shaded blue area is where this stock, in NVIDIA in this case, is in a Bollinger Band squeeze. Okay, so forget standard deviations.
So which line is which? What's the purple and what's the blue?
So the purple is the Bollinger Band.
Okay.
And the blue is the Keltner channel.
Okay, so it seems pretty rare that the Keltner channels, the blue lines, are actually outside of the Bollinger Bands, the purple lines.
Yeah, so that's the normal state, right?
Is that the Keltner channels are inside the Bollinger Bands?
Yes.
Okay, interesting.
Yeah. And you
what
really...
inputs are you using? Are these standard like 20 period Bollinger Bands and 20 period Keltner channels, or is there something fancy you've had to do?
Yeah, it's a 20 period, both are 20 period,
okay.
And it's gonna be 2 standard deviations,
okay.
And it's gonna be 1.5 ATRs for the Keltner channel.
Okay. All right.
Thank you. Those are fairly stock settings for a Bollinger Band squeeze.
Okay.
And again, we don't have to worry about standard deviations or ATRs. I mean, this is the math that's going into these indicators.
Yeah.
But the key is that we're looking at volatility bands and we're just measuring how they react to each other.
Okay.
Right. So.
All right. So I have a squeeze and I put the trade on.
No.
I just go crazy. YOLO, right? Press the button. Let's go.
We have no idea if the stock's going to make a move. All we know, and this is actually a really key point, because with indicators, like all these things are math, right? These aren't magical potions or anything like that. It's just math. So quite literally, a Bollinger Band squeeze is telling you that the stock has been resting for a certain quantifiable amount of time, and it's compressed a quantifiable amount. So all it's saying is that this has built up energy. Is it saying it's going to do anything? Is it going to go higher? Is it going to go lower? Once it breaks out, is it going to trend? We really don't know. We just know that it has energy. It has the potential.
So then what do we look for to identify? That's great that it has potential, but what specifically are we looking for to be able to identify this potential turning into a probable?
Yeah, so this is where the other indicators are going to come in. Right. So and usually the longer the Bollinger Band squeeze, the better, right? Because that means it's been compressing for even longer.
Is there a general timeline that you look for?
So I like to have at least 5 bars, but then again,
5 1-minute bars, 5 minute bars.
These are we're on a 5-minute time frame.
Okay.
For this entire presentation, so all these charts are 5-minute intraday time frames.
Okay.
I think it's a really good time frame for this.
Okay.
And you can see in NVIDIA in this situation, that was a very long Bollinger Band squeeze, right? And so if you look down at the bottom, you can see the red dots.
Yep.
Right, and that's just the TTM squeeze indicator on Thinkorswim.
Okay.
Stock indicator. I took out the histogram.
Okay.
The histogram, some people might use that. Great. All we're doing here with the red dots is identifying when it's in a squeeze. That's all we want to know.
Okay, so if I'm on TradingView, I could do the exact same thing, just putting in the standard things and just look at it. I may not need the dots or anything like that. And if I'm on any other platform, same thing. You can just find it.
Yeah, this is a very generic indicator that anyone can bring up.
Okay.
Right? And the real indicator is the red dots down at the bottom, right? That's all you need to see that it's in a Bollinger Band squeeze. I put the Keltner and the Bollinger Bands on price above just to show you how this is created, the math that's going into it, the fact that, and you can even see the bands are pinching, right? They're coming in. That's showing that volatility is contracting. Right?
Okay.
And that's what we want to know.
So what comes next? Because, we can identify volatility contraction based on this term pretty easily. It's a very visual thing.
Yeah, exactly.
But you just told me that doesn't have edge.
Yeah,
in the way that we're looking
so in
for.
this case, NVIDIA made a huge move out of this, right? And it
Yep.
makes sense, right? It rested, it contracted, it built up energy, and it made a move. That's what we want to capture, right?
Yep. But I can't just take this blindly.
No, you can't.
Okay.
And, this is one component, right?
Okay.
And look, we can look on a chart and we can tell when something is contracting, right? If someone said, hey, I don't need a Bollinger Band squeeze, I can just look on the chart. Great, you're right. But there are a few reasons why we might use an indicator to tell, right?
Okay.
One is readability, right? Like we might just not want to have to count bars or like try to quantify like too difficultly. We just might want to get an alert that says, okay, it's in a Bollinger Band squeeze.
Yep.
Another thing is if you want to put this into a model, right, and you're coding in Python.
Yeah, you can't backtest by visually walk. I mean, you could, but it would take forever.
Yeah,
if
well,
you're just going back and marking each bar individually. But,
and you have to have some way of quantifying it because
Correct.
you can't tell Python, hey, all right, so I want to do this when the stock is compressed.
yeah.
Like that doesn't mean anything.
Okay.
So this is just a way to quantify it.
So you've identified with this, just to sum it up really quickly, with this strategy, the first component of it, this first indicator for really effectively trading explosive moves in 0DTE options is seeing that compression. And we're defining that compression by a squeeze, essentially the Keltner channels trading outside, or I guess the Bollinger Band trading inside of the Keltner channels, showing that period of rest.
Yeah.
Okay,
Yeah.
great. So then what do we do next?
Yeah, so now we can identify when a stock has built up energy, right? It has the potential to make a big move, but this doesn't mean that it's going to trend once it breaks out. We need to make sure that there's a high probability of continuation in our favor. So that's what the next part is going to be about, okay? So when we're trading 0DTE options, we're often buying out of the money calls or puts because this makes them even cheaper and increases their sensitivity.
Do you have a metric of what, am I buying any out of the money calls? Like, do you have something that you prefer?
Yeah, I mean, I actually like to look at the chart. I know a lot of people just look at the deltas, and that's fine too.
Yeah.
But I actually like to see where I think it can go.
Oh, interesting. Okay.
And then I'll also look at the delta as well.
So
But
if you're thinking if this breaks out of range visually, it could go, not visually, but technically it could go up a certain amount. So you're kind of finding a price target.
Yes.
And you're buying to that target? Or
Yeah.
you're buying...
Well, because the deltas are changing so fast
Yeah.
with these, because
Yeah.
it really depends what time of day we're doing this,
Yeah.
right? Like if there's only an hour left in the day, those deltas for that same distance are going to be a lot
crazy.
lower.
Yeah. Okay, that makes sense. All right, that's good to know. So pick a price target on the chart and essentially buy to that is what your strategy tends to be.
Yeah.
Okay,
Because I
good.
really want it to get there really fast, and if it blows through it, I mean that you really can get a lot out of these
Yep.
options.
Okay, that makes sense.
So again, in this situation, there's another risk, right? The risk is that the stock won't move far enough and fast enough, right? We just talked about the target, so we need it to get there, right?
Yeah.
So in other words, how can we make sure that the market is in trend mode?
Yeah.
Because that's really the kind of environment we want to be in when trading these kinds of options. So there's
this would be different than most days or most 0DTE strategies, where for 0DTE strategies, I think even if I was watching a video that I think Justin did the other day, and there was an ad that popped up about somebody talking about a 0DTE strategy where he's selling premium. And I think that's what most 0DTE strategies are, right? But this is not selling premium. This is, I want an explosive fast move. I'm not looking to capture 100% of a 2 standard deviation away from the money. I'm actually looking to capture a significant move, even if it is 2 standard deviations away from the money, which is my price target.
right.
Okay,
Yeah.
so you're looking for situations where it's beneficial to take the other side of that premium sell.
Exactly. As
Interesting.
everyone's
Okay.
stopping out of the trade who's shorting these things, and we're really
Which probably actually builds on the trade on its own.
yes.
Oh, interesting. Okay. All right, cool. Hopefully you can help us see that. All right, let's go.
All right, so there's an indicator that's amazing at identifying market trends, and it's called the tick. Okay, so one of the great things about this indicator is that it's not measuring anything about the price of the index or stock we're trading. Instead, it's analyzing the action of all the stocks in the index and measuring how broad the buying or selling is at any moment. And so this is really great for when we're trading futures, we're trading the index, we're trading the Qs, we're trading the SPY, or high beta market names, right? And when we're trading these kinds of options, we really do want liquid names, right? We're not going to be doing this on illiquid names, because we want to be able to get in and out of these options. And so typically, and a really good way to do this is to be looking at either the Qs or SPY, maybe SPX if that's your thing, right? Or the Teslas of the world, the Googles and the Metas and the Nvidias, right?
So you're looking at markets or market names that are in play for this.
Yes.
And so one way that we can define in play on our desk is, say, if it's trading 3+ R vol, right? That's very quick standard. We can talk about why we think 3+ R vol matters, but I can't remember a day when I've looked at SPY after like 9:31 and it's trading 3+ R vol.
Yeah.
So what do I do in that case?
Well, I mean, this is why we look at the tick, right? And
Okay.
We look at the internals. We look at the tick. Tick is one of the internals when we're trading the market. Volume is much harder to pick up on when we're just looking at the Qs and the SPY and stuff like that.
Okay.
So
So if I'm looking at, maybe if I'm using R vol, so I have the tick maybe in my favor, and then I'm checking R vol to make sure it's in play.
Yeah.
If I'm looking at like a 1.2 R vol in SPY or Qs, is that acceptable?
yeah, it's fine.
Well, 1.5 would be good then.
1.5 is amazing.
Okay.
Yeah.
All right. What about in a market name? Because you mentioned some of the market names. Are we talking like maybe 1.5 is acceptable? If
Yeah,
R vol is 1.5, that's acceptable for this?
That's acceptable for this.
Okay.
Yeah.
And then 2 would be maybe...
Two
Good.
would be amazing.
Okay.
Right? And it's a special case situation, right? Because you might see this setup in the market.
Yeah.
But then you might actually look at something like Nvidia, and that might be having a very special day.
Yeah.
And you might be able to make twice the trade
Oh,
in
interesting.
Nvidia, right? So if Nvidia is doing 2 or 3 R vol, maybe it has a catalyst, and you're seeing this setup in the market. I mean, you might gravitate to Nvidia
Okay.
and really capture a huge move. That's when this might be an A+ setup for you.
Okay. So that's good to know. So that's an advanced topic, I'm guessing. But all right. So sorry for diverging, but
Yeah.
I need to know this stuff because I want to learn this and better implement it in my own trading.
Yeah.
But what do we need with tick?
Yeah. So when this indicator is holding above 0 or holding below 0, we know that we have a seriously trending environment. When the tick is holding above 0, it means that more stocks are ticking up, trading on the offer, than ticking down, and the market is sustaining this. Okay, so in the flip side, when the tick is holding below 0, it means that more stocks are ticking down, trading on the bid, than ticking up, and the market is sustaining this.
Okay. So if I'm hearing you correctly, then it's find the squeeze where the Bollinger Bands are trading inside the Keltner channel, and make sure that you have tick in a trending fashion.
Yes.
Trading above 0 or for the long side, or below 0 to the short side.
Yes.
Okay. So if I have that, then I can surely buy out of the money calls and just go, right?
It's a great starting point. But
Okay.
like we're not totally done with the.
Okay.
There's one more.
Okay.
After this.
Okay.
But look, I mean, at this point, we have a compressed market that has energy. It's rested.
Yeah.
And we have a market that has either buying pressure or selling pressure, enough of that to turn into a trend. So
Okay.
this is really what we want. This is what we're after.
But that's really just the setup then, right? I don't have an entry trigger.
Exactly.
Okay. All right.
So the tick is one of those indicators that it's very straightforward. It is what it is. It's telling us exactly what is going on under the hood, just literally. And on big trend days, this is the kind of thing we see over and over. Okay, so if we look on the screen, I've highlighted in blue the areas just over this is within the last few weeks, actually. I just picked a random point in the chart, and you can see these two areas are very, very easy to see, where the tick is trending above 0, and we see that massive uptrend. Again, this is a 5-minute chart.
So the tick's on the bottom of the chart here, and then we
Yeah.
see the trend. Wow, that's crazy. Okay.
Yeah, and so I mean, and you can see, look, like the ticks can wick below 0. It's not like we can't let it go below
But
0.
like 80% of it is
Exactly.
maybe even 90% of it in these cases.
80%. Most of the closes are above.
Okay.
Like you can look at it that way.
Great.
And so we have a good uptrend here, and then we have a good downtrend, perhaps the day later.
Yep.
The next day there. All right. So we have a stock that's ready to move. We have a trending environment. So we want to know when to enter and when to exit. Because remember, we can't waste time with 0 DTE options. We don't want to sit and chop waiting for it to go. And when we're in the trade that's working, and this is really important, we don't want to let it go against us or even start to rest again. Like even if it starts to go sideways, it's gonna start, our position's going to start deteriorating.
You're giving me the palpitations right now, thinking about all the times I've been in a trade, especially using 0DTE, and you know that you're right on the direction. You know that you're right on the direction, and you feel like it's got more to it, and you're up 80% or 100% on your options or 200% on your options. But as soon as it starts to go sideways, like that's where my heart starts going, because I'm like, I know this is going to go further, but it comes off so quickly. And all of a sudden you're up 80% and it feels like a blink.
And then
you're up 30%.
Then it just takes one little down move to kind of trigger the whole thing.
Okay. So you're going to give us some guardrails around this.
Exactly.
So, okay. Because that's the part for me that's the scariest. That's my biggest challenge with 0DTE.
Yeah,
so how do you avoid that?
So this is very nice. And this is actually something we put in our algos too, like a way to manage position. So it's very, very simple. So it's easy to give back our explosive gains when trading these options, right? So how do we make sure to enter correctly and get out when the move is over? So what we're going to do here is we're going to use an ATR trailing stop. Okay, this is an amazing indicator at keeping you in a trend until something changes. It's a volatility stop. So when the stock goes against you with a certain magnitude of relative volatility, it gets you out. And in the same way, it can get you in. So when the trend is cruising along and there's nothing to do, it will help you stay in the trade. And this is exactly the kind of discipline, I hate using that word, but that's kind of what this gives us, and nimbleness that we need when trading 0DT options.
It's really a guidance principle, because that's the challenge that I have. That's where the most pain and frustration comes in for me is either being in too soon and seeing your P&L dwindle and feeling like you need to make a trading decision even though nothing's happened, or even worse, which is more painful, being in a trade that's worked, but you know there's more there, and you know if it keeps going, you're going to feel awful for taking it off early. But also you know that the clock is kind of against you a little bit, and one little tick is going to take away so much of your P&L. And so this is the part that I'm most interested in. So help me understand a little bit.
It takes the emotion out a little bit too,
okay.
Right?
Yeah.
Just
so when you're saying
rules.
Discipline, you're not really saying discipline and I'm going to do exactly this and all that stuff.
Yeah,
it's more getting the guidance.
Like we should have discipline. That should be something that we're not even talking about, right?
Yeah.
But it just helps take the emotion out. It helps quantify things, give you some rules, right? Which are always good when trading.
Yeah, that's how you could backtest something like this and understand if it has edge. You can't tell a backtest to stop, exit the position when Jeff thinks that it's at its target.
Enter, exit the position at max P&L.
Max P&L. Yes, I'd love to run a backtest like that. Okay.
So this is, on this chart, we have an ATR trailing stop. Okay, and this is literally a 5-minute chart, same as before. I think on this we used a one ATR 3-period ATR trailing stop. And you can see that in a few of these trends, it keeps you in the trend really nicely. And then when things start to either consolidate or trade against you, it gets you out. So when that blue line is below price, it's long. And when the pink line is above price, it's short. And it's as simple as that. And you can see a few of these instances where it starts to get chopped up, and that's when the stock's resting. And that's fine because we have a setup, right? We're not just trading this trailing stop. This is just something that we're going to use within the context of having something that's been resting and now is set up to trend. And so we're going to capture that, and then we're going to let this manage the trade for us. So we have some examples of putting these three together that we can go over. All of these examples are taken from the last few weeks. We've been actually seeing this set up a lot lately in the market. So you can trade this setup, like I said, with futures, Qs, SPY, high beta market names, anything. We're going to look at the Qs, but we're going to look at one example in NVIDIA.
But we're specifically using 0DTE options because the leverage they provide but we have to recognize that leverage can go against us if we're not specific with our setup, which is what you've created here, is a very specific setup. Okay.
Yeah.
Let's look at the examples because I'm really interested.
All right, here's the QQQ. Super simple, right? We get a little down move at the open and then it starts to consolidate. And when those red dots start to show up, which I highlight in blue, that means that it has consolidated and compressed enough for enough time to start giving us that squeeze signal.
So if we put the Bollinger Bands on the chart, the Bollinger Bands would be inside the Keltner channel at that point.
Yes.
And this is the 5-minute chart again, right?
Yep.
Okay.
Yep.
So we've got the 5-minute chart with the Bollinger Bands inside the Keltner channels. And then we've got the tick on the bottom that was below zero. And then what's my entry criteria?
So I like to do two things. Right? If you're going to be really aggressive, you can short on the first close that breaks the ATR trailing stop. So you can see in this case, we're above it when the squeeze indicator starts to trigger. And so you can wait until it flips short, and a close below that is going to flip it short.
So the bar closing below that indicator. Okay.
And that would be an aggressive entry because we haven't broken support yet. So you might do half there. That's what I like to do. And then you could do half on the break, the first close below the support.
Okay.
If nothing else, I like to just short the break. I mean, it's super simple, but this works too.
Okay.
And once you're in, you're just using that trailing stop to keep you in the trade. Because for me, I know that sometimes I need help getting out when it starts to go against me because I think it can go more. And, like we said, with these options, we can't waste time. But also, sometimes I have a tough time seeing this entire move, right? Like after maybe the first down move, you're up a little bit and the options feels good. You're like, oh, I'm just going to book the trade because I'm terrified that these things are going to start decaying on me.
Yeah.
But this is a very tight ATR trailing stop, one that is designed for this trade. And so if it doesn't trigger you out of the trade, you're good. It's still trending lower and you're going to capture that move. So for me, I like this because it actually helps me stay in the trade until I really should be getting out.
Yeah. So you're buying to the target of your price target, but you're actually trailing the stop using the ATR trail.
Okay.
Okay.
And so what's going to trigger you out of it is the first close above the ATR trailing stop in this case. So you can see the blue circle there.
Okay.
Gets you out, and that's a pretty big move. I mean, that's almost like capturing a trend day.
With everything lined up, yeah, that's great. And the option premium must have been very much going in your favor for a lot of that time, even through the pause, because it looks like it had a little brief pause there. You're still not closing above that ATR, trailing ATR. Okay,
exactly.
Great.
All right, so next one. Here's a long example in the Qs, and this was actually last week, I think. And I like this one because sometimes the compression and the squeeze is harder to see than others if you're just looking at price. Sometimes those wedges, those compressions, they get really tight, and you really don't need a squeeze indicator to kind of quantify that. It just looks so good. This was a little bit messier because we had kind of a deep pullback in the morning, and then it started to reclaim and go sideways. And eventually we started to get those.
You might miss it.
Yeah, absolutely.
You legit might miss that. I could not have picked that out on the chart without that indicator. So that's good. So that's the first component of this. Yep. And then the second would be looking at the tick. So you're probably noticing that tick is occurring first and then looking for the,
That's a great point. Because, the first thing that kind of triggers you to think about the setup is the squeeze, but you're right. That's an incredible tick. Look, it's barely trading below zero.
So if I see the tick holding above zero firmly, then I can start to look for the TTM squeezes or the Bollinger Band squeeze or whatever you're going to call it. Yeah. Okay.
Yeah. Because this is the kind of, when the tick looks like that, I'm looking at the market.
You're looking for that squeeze. That's the first step.
Yeah.
Okay. All right. Cool. Yeah.
And so, we have a big heads up with the tick on this one.
Yep.
It's super, super clear. And again, you can, in this case, you can just get in because it's above the ATR trailing stop. Mm-hmm. And again, your stop is a close below the ATR trailing stop. So that's how you're going to risk it. But what I would do if I'm going to buy the break, I wouldn't be buying the break of the high day. I'd be buying the break of that smaller consolidation that's right around where price is
Right
trading.
where that blue dot is. You just
Exactly.
buy the breakout of that.
Yes.
Okay. All right, great.
Yep. And then you trail it until you get out. And you can even see how when we get out from the ATR trailing stop, that the tick actually starts to get a little bit messier. But we basically caught that super clean, tick trade right there. So
no, that's great. So you said earlier that you're not just looking at this for market stuff. Let's assume you see a strong tick reading, right?
Yeah.
Are you then looking for the scans? Do you have a scanner, or are you kind of scanning through stocks to look for the other checks? How are you finding individual stocks in play?
Yeah, so
that you want to look at?
What I'm doing is I'm watching all the high betas. That's just how I do it. I have
Okay.
a screen that tells me all the high betas,
Okay.
right? But I also have within that an alert for whenever one is in a squeeze.
Okay.
And I'm not always looking at that because I'm not always trying to do that kind of trading.
Yep.
But when the tick,
Is it pretty easy to put in? Put in that alert? Okay.
Yeah,
You
yeah.
just have a window on the side or something like that?
Yep.
Okay. All right, great.
But when the tick is trending, that's when I'm actually really looking for these setups.
So you're
because
looking
that's
for
when
that tick
That's when
first.
we have a trend.
Yep.
Yeah, absolutely.
So you're using the tick to give you the context of the setup.
Yeah.
Okay.
Yeah, 100%. That's a great way to put it.
Okay.
And so this is NVIDIA long setup. And this is another example where I think spotting that compression is a little bit difficult
Yeah.
when just looking at price. But we do have a squeeze pretty much right at the open. And the tick does open negative, but it quickly reclaims and it just trends above the zero line for a while, right? So by the time the trade triggers, the tick is trending above zero and we have a squeeze. And so what I'd be doing is I'd be buying the first candle that breaks the ATR trailing stop with a stop below. And then, you trail out there near the high of day. And again, just rinse and repeat.
Yeah.
And you can put this in a model. You can trade it discretionarily.
To really quickly sum it up, what we're looking for first is, an individual name or a market to have that squeeze, right? So that Bollinger Band trading inside of the Keltner channel. That's the first indicator that we're going to use on this. And then what else do we need, Garrett?
We need the tick to be trending, right? Holding above or below zero. And by the way, if you want to learn the ins and outs of what makes the tick indicator so powerful, we made an ultimate trend day video where we break this down. So we can link that in the comments. In fact, these trend days are so great to be trading with these 0DT options. So I think that this video can be a fantastic supplement here because it really talks about how to identify these super powerful trend days.
Okay. So they can go check that out if they want to. But the third thing that we need here for these purposes, the third indicator we're using then is that trailing ATR that you have on the chart. And so that's just a standard. Can you go over the metrics one more time for everybody?
Yeah, it's going to be a 3-period 1 ATR trailing stop. And this is a 5-minute chart.
Okay. And I love that because that's taking away so much of the guesswork of where do I exit my position? How long do I hold it? What if it starts to go against me? So I really like the structure that you put together here. Thanks for doing this today.
Great. Thank you.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we've found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.